By now, you're probably aware of the benefits of having a diverse portfolio and how it can help to minimize risk by spreading your investments over several types of assets. But with so many assets out there to choose from, how do you find your perfect match? To help find your stocks and shares soulmate, today we're going speed dating with 3 assets you might not have considered before that could help diversify your portfolio. Now, just as no one can tell you who to date, we're not saying you should definitely invest in these 3 assets. This is not financial advice. We're simply presenting you with 3 potential options. It's then up to you to decide which ones, if any, make it into your heart or portfolio. You know what I mean. Our first eligible asset is a real estate investment trust. Property Mogul might be on a lot of people's wish lists, but in reality it's not always possible to own an investment property or afford a home with a mortgage. With a real estate investment trust, you can invest in property and commercial real estate with a relatively small sum of money. Real estate investment trusts allow you to earn a passive income through your investments, so you can kind of own a few slices of a few properties and potentially make some money from them without having to become a landlord or sell your firstborn child to front a deposit. The second asset that could find a place in your portfolio, if you decide it's right for you, is an investment trust. Simply put, an investment trust is a company that invests in other companies. They are publicly listed on a stock exchange, so you can invest in them and use them a bit like a fund or exchange-traded fund to get access to a managed mini portfolio of investments that can contain anything from space technology to private equity. It's worth bearing in mind that every asset comes with different pros and cons, and investment trusts can typically be a more expensive option than something like an ETF because they require more dedicated management and curation. The last asset I want to introduce you to might be a bit of a familiar face. Meet asset number 3, currency. Typically, cash tends to devalue over an extended period of time due to inflation. That might seem like a bit of a red flag, but depending on what's going on in the global economy, holding a foreign currency in your portfolio could be a useful way to diversify your portfolio. For example, rising interest rates led by the Federal Reserve actually strengthens the US dollar, which makes each dollar more valuable compared to other currencies. As I said before, this video isn't an endorsement of any of these assets. So if any caught your eye, make sure you do your own research to ensure they're the right fit for your portfolio. If you want to learn more about diversifying your portfolio, check out our full guide on finder.com by clicking this link here. If you enjoyed this video, like, subscribe, and hit that bell button. Until next time, thanks for watching.